Hello and welcome to a special episode of Pakistani where I am joined with Mubariz Siddqui, who is General Counsel at Sarmayacar and is someone who has a very deep understanding of Pakistan's startup ecosystem and the regulations surrounding it. And we have him here today with us on this special episode because yesterday the State Bank of Pakistan made a very big move liberalizing foreign currency regulations that basically, according to the SBP itself, quote, modernize the foreign exchange manual to facilitate startups, fintechs, and exports. It is a big development. If you haven't seen the policy document, we've linked it in the description below. But I figured that I would have Mubariz here to help us understand what this basically means. And in fact, right on the back of this announcement just today, a startup raised a 7-figure funding round as well in the payment space. So Mubariz, first of all, I know you worked a lot on the regulation side, particularly on what the SBP announced. So congratulations to you on that. And let's just start by having you first explain to the audience why this is a big deal.
Thanks a lot for having me, Uzair. On the working side, I think there were quite a few people involved who made this possible, and thanks to all of them. There were some in the front and some behind the scenes as well. But essentially, what has happened, and in order to understand the significance of these regulations, we need to understand what the position was before they were passed. Now, before these regulatory changes, a Pakistani tax resident or a Pakistani resident not own equity in any company outside of Pakistan without state bank approval. The state bank approval mandate was very limited. It was only limited to companies and some ESOP shares in a listed entity abroad, which had a presence in Pakistan as well. And other than that, even for companies to own or expand abroad or own subsidiaries abroad, they needed state bank approval, which was not very easy to obtain and would take long. What this policy shows is a complete shift in mindset and the way Pakistani government now is going to allow Pakistani residents to own shares in companies outside of Pakistan. And now there are different heads in which you can go about it. If you are an export-oriented company, you can have presence abroad. You can invest in a subsidiary outside if you want to expand in regional markets. Pakistani startups can now, Pakistani founders can now have holding companies set up in jurisdictions like Singapore, Netherlands, and other jurisdictions where they can attract smart capital to invest in Pakistan. Pakistani residents are now also allowed to invest in listed securities outside of Pakistan. But there's a limit to it. Pakistani residents can now be given ESOP to a higher amount. They can send money abroad to exercise that ESOP and not only rely on a net exercise where they only get cash. And lastly, Pakistanis can be granted sweat equity in entities outside of Pakistan. So a fundamental shift in what was allowed before and liberalizing the Pakistani foreign security regime.
So let's use some examples here, right? There are 4 big categories. I'll touch upon a couple of things you mentioned. So if I am, let's say, a Gul Ahmad or a Khadi, and I want to open up a chain of stores in London, in New York, in Paris, because I'm in the fashion scene and I think there's a market there, it is now easier for me to do so because I can structure a company in Luxembourg or Delaware or whatever and start doing those operations, take advantage of attractive jurisdictions abroad that then allow me to tap into an international market. Or if I am a Pakistani startup, similar to a Flipkart in India before it was bought over by Walmart, had a holding company in Singapore that allowed it to get access from East Asian venture capitalists and grew tremendously, ended up being sold for over $15 billion as it grew. So that's why it's a game changer, right? Because the market both for goods but also the market for capital is accessible now to Pakistani entrepreneurs.
Exactly, and I think what the recognition now is that coming to the holding company structure first, which was a big impediment, because what would happen was that when people, and I wrote about this, and I can share that piece with you as well, that only Pakistan resident startup founders were restricted from setting up a holding company, say in Singapore or Netherlands or ADGM or DIFC. But if I'm not a tax resident of Pakistan, say I'm someone moving back to Pakistan, I had no such restriction. So fundamentally, what has really happened is that the playing field has been leveled. And let's not forget that in Pakistan, historically, people have not invested in people. Funding has not been accessible. You could only really think about funding a business of yours if you grew up with capital, or if your family had capital, if your friends had capital who trusted you. Otherwise, it wasn't really accessible. What this has done is it has made Pakistani entrepreneurs accessible to capital all across the world. And now the filter before was that would that investor be willing to invest in a Pakistani company? And as we are aware, depending on how the capital is flowing, it's subject to mandates, and it's subject to restrictive jurisdictions. You can't just invest in any jurisdiction if you're a Sequoia, even if you're an A16Z. There are certain jurisdictions that have been green lighted for you, and that's what now Pakistani entrepreneurs can take advantage of and be able to attract the smartest capital in the world.
And I mean, it's also, removes the impediment of the rule of law question, right? I frequently hear that from based here in DC from American investors, even big companies, that it's a challenge. So now if you have a holding company that has jurisdiction in Singapore or Amsterdam, you know that that's the legal structure through which you operate. And therefore there is a less risk involved in terms of the fact that, hey, do I have to go to Pakistani courts all of a sudden to settle a dispute with these startup founders? In fact, now you don't have that risk because it's based in Amsterdam and you have more lawyers there. You have a better understanding of the system there. The rule of law is better. So it reduces that big impediment. I would say that it's not a hard quantitative issue, but it's a very qualitative and a very strong weightage issue in terms of when investors make decisions.
Of course, and before actually right now, the current position is that Pakistani companies, private companies, cannot set up ESOPs, cannot do share buybacks. SECP introduced legislation last year, but that legislation, those amendments lapsed, and they're now being reintroduced. But the fact of the matter is that today, if Stripe wants to invest in a business in Pakistan or a business that operates in Pakistan, it would be very hard for them to justify why they're investing in an entity that cannot set up an ESOP, that cannot do share buybacks, that has so many other limitations around them. And full credit to SECP, they're trying to catch up, and it was the parliament that let that ordinance lapse. But still, while those situations are improving, as you rightly pointed out, the dispute resolution situation is still not improving, and there's no progress in sight currently. So it just becomes extra difficult for these investors to justify why they are investing in a Pakistani business when these regulatory concerns pile on, and when now they have to convince a board or committees around why they're investing in a jurisdiction that none of them are familiar with. So being able to do it in Singapore or Netherlands allows us to do that. Now, what the balance that SBP has done well is that Pakistani residents are still restricted from, it's mandatory for them to bring the capital, say after capital gains, say if they make an exit. If I am the founder, I have to bring back all my capital to Pakistan. And that was an important consideration for Pakistan, so that Pakistan does not lose out on all that foreign exchange, even though the invested capital would still go into Pakistan, and that would still create jobs, that would still trickle down, and that would still.
I was going to say that, if you're a Pakistani founder who does have a successful exit and let's say makes $50 million through that exit because of the holding company in Amsterdam, because you made your money in Pakistan, I would argue that they actually would be incentivized to bring that money in and reinvest it. That's just how startup ecosystems grow. So that's also a good step. Coming to my last question with you in terms of, we saw in 2020 a pandemic year. Despite that, funding flows increased in Pakistan, and it was actually a very good year for the ecosystem as a whole. SECP, State Bank, as you said, have been more forward-leaning in terms of liberalizing the system and helping it grow. We have this announcement now. Where do you see things moving next? Like, what is next on the agenda, or should be on the agenda, to make sure that this momentum that is exponentially building up continues to propel the startup ecosystem forward?
Well, I think now it's just down to the founders, because the major regulatory impediments are gone. If you're setting up a YC company, you're getting admitted to YC, or if you're raising capital from any notable investor outside of Pakistan, it's all it's all easier for you to do now. Now it's about the founders, and now it's about capitalizing on the opportunities that Pakistan offers. For me, I think 2021 would see a lot more fintech deals happening, in the sense a lot more investment going into fintech. The way venture capital financing works, it compounds really fast. The valuation and the capital that is required multiplies really fast. So I only expect that figure, which is somewhere between 60 to 70 million that was invested last year in a pandemic year. I expect that to increase quite substantially over the next 2 to 3 years. I mean, today I was really heartened to see a tweet by Patrick Collison, who's the founder and CEO of Stripe, talking about Pakistan and how they've made their first investment in SafePay in Pakistan, which is phenomenal for the ecosystem, right? Where there's a big thumbs up and a big sticker of validation for Pakistan as a market. So yeah, super exciting things are happening, and we are in Feb. I expect by December a lot more would have happened in the Pakistani entrepreneurial ecosystem.
Well, I agree with you, and I'm optimistic as well. So thank you for joining us. Thank you for explaining what this policy decision means. Keep up the great work. You and the rest of the folks in the country are helping move the ecosystem forward, and wish you all the best.
Thank you very much. Thank you. That was very kind.